If you're feeling like it's impossible to buy a home here in Spokane, Washington, you're probably not alone. And today we're going to break down some numbers showing exactly why that is and hopefully some relief that we'll see here in the future. I just want to make sure you don't feel like it's your fault that you can't buy a home here in the Spokane area right now because things are just a little crazy. So our friend Matthew Gardner, he's an economist based out of the Seattle, Washington area. He had posted on Facebook a little bit ago just the difference between how much somebody had to make on their annual income in 2021 versus 2024 in order to afford a home. And now it's just interesting to reflect back because 2021, we were in the middle of the pandemic. And I was having a lot of conversations with people about how they just didn't feel like prices could go any higher. They were waiting for prices to drop, even though interest rates were at all-time lows. And now to see where prices are today, although interest rates are triple what they were at that point. So to start off, just why are prices not dropping in the Spokane area? The answer is supply and demand. Even though there's a lot of pressure on our market right now in terms of affordability because prices are high for our average income in the area and interest rates are high or higher than what they were, we still have a supply and demand issue. There's still a low supply of housing for the number of potential home buyers that are out there. Right now, the biggest issue is that our market is fairly stagnant. That meaning that what's happening is that there's a lot of people that have put their house on the market. We have more active listings than we've seen in the last few years. And theoretically, there's quite a few buyers on the sidelines right now just waiting for the right property. When there's a really good property that hits the market that's priced right, it sells fast. But if there's a property that's on the market and the landscaping is off, or just the bedrooms aren't quite big enough, the layout's maybe not perfect, buyers are patient right now and they will wait for that perfect house to show up because they know that they have the upper hand right now. So we're not at a point in the market where the supply is outweighing the buyer demand so much that almost every single house is sitting on the market no matter what. So if you are somebody that is ready to buy right now, your finances are in order, this is actually, like, I hate being that realtor that says it's a good time to buy. It never is, but if it's a good time to buy for you, then it is actually right now a good place to be because there's very little competition among buyers. Sellers are willing to take big price reductions or fix everything that you would be looking for to put a deal together because so that they can move on to their next thing. So if interest rates are not a concern to you or the prices work for what your budget is, especially if you're somebody that's buying above like $600,000 right now, like by all means, like I've said, encouraging you to get out there, make some aggressive offers because now is the time before interest rates potentially fall. The latest headlines are showing that their economists have 100% certainty that we're going to see a rate drop in September. Of course, I will report on that on this channel. If that comes or if it does not come, we'll let you know. But if that rate drop does come and it's significant, then we're going to see more buyers enter the market because affordability is going to open up and we're going to have seen prices come down quite a bit just because of the seasonality of our market. So now let's jump into these numbers and look at what is the reality of the situation and what's changed between the beginning of the pandemic to today. Well, in 2021, quarter one in January, the average home price in the Spokane area was $350,000, $351,000. A year later, they had gone up about $75,000 to $425,000. Then as interest rates began to rise, we saw a pullback in prices and the average price dropped. There was a drop it came down to about $407,000. And this isn't even the biggest average of the drop. If you watch the drop from about April of 2022 till January, February of 2023, prices came down about 18% in that period of time. So there was a huge drop. That's the same rate at which home prices dropped during the Great Recession in 2008. So we had a big reset during that time. Just like in the stock market, the bottom of the next stock market crash, which we don't know when that's going to be, but the bottom of that next crash is likely going to be higher in the market than where we are today. The bottom of a crash is going to be worth more in the stock market than it is today. And that's the same thing that happened in this housing market. Even though there was kind of a crash, it was worth significantly more than what it was previously. And so now, going a year later, we've recovered. Q1 2024, we're at $426,000 on average. So many of my clients that bought in 2022, they've not seen much equity growth over that period of time. Prices are relatively flat. There's been some peaks and valleys on a month-to-month basis, but price is relatively flat. The biggest change is that over that 4 years, interest rates have almost tripled, and they've just continued to go up. We're just now seeing some potential relief after about 2.5 years of consistent increases in interest rate. So now everything in regards to purchasing a home gets more expensive the more interest rates go up and the more prices go up. So when you have the house price go up, well, now you have to bring more of a down payment to the table, and your closing costs are higher because the more of a mortgage that you get, the more you're going to pay in closing costs. So now instead of having to bring $22,000 to the table for your down payment and your closing costs, now for these numbers, he's assuming that you're bringing a 3.5% down payment, like an FHA loan, first-time home buyer, on a 30-year fixed loan with 0 points, just basically not buying down the interest rate. You would have mortgage insurance because you would be putting less than 20% down, and then factoring in homeowners insurance and property taxes and things like that. So this is saying 3.5% down payment plus about 3% for your closing costs. So now you have to bring an additional basically $5,000 to the table in order to purchase the same home. Now, the other thing that I don't think a lot of people are talking about is that the cost of maintaining a home is at an all-time high and is continuing to go up. So in regards to getting your furnace serviced or having somebody come and repair a plumbing issue, anything that regards to fixing your house or even making upgrades to your house is more expensive. So on average, the monthly cost for maintaining your home has gone up about $100 a month, from $565 in 2021 up to about $686 till today. And again, we can kind of see that it kind of peaked here in 2022, came back down, and now has risen up again. So it kind of followed the same trend line. That housing supply economy, the people that supply services to the housing market, also kind of ride the wave of the housing market, and their prices will ride that wave as well. So not only do you have to bring an extra $5,000 to the table in 2024 in order to get into the same home as you would in 2021, but your monthly expenses, of course, are going to be significantly higher. So now your costs to own a home here are broken down by your principal and interest payment. So this is what goes to paying down the loan and goes to the bank. And so that was $1,400 back in 2021. And then really, even though home prices came down between 2022 and 2023, that price still went up by $400, over $400, because of the interest rate increase during that time. And then we have still seen that go up in 2024 because there was still an increase in interest rates there. Now, the thing that we don't really factor in is all the other costs. As housing prices go up and the economy is doing what it's doing, everything else in regarding a home is more expensive. So property insurance, which has been a big thing this year, has gone up quite a bit. I would say that 102 almost seems high for 2021. I feel like any quotes I was getting was more in like the $80 range. And then this 124 seems pretty realistic, actually. I mean, if you're getting anything, I mean, I have a 1950s home and I'm paying over $1,200 a year for homeowners insurance. But I know some people that get large new construction homes that get quoted like 600 because they're just less risky houses. But like when I bought a fourplex, a 4-unit building, it shocked me how much insurance was. It was like over like $2,400 a year or something. So it's kind of crazy. But the biggest thing right now is that just depending on where you buy your house, if there's potential for forest fire or anything like that, it's going to be way more expensive than this. Hazard insurance, they're being very cautious about potential hazards and charging a lot for it. So this is a huge factor in pricing now. Property taxes, of course, are going to go up as prices go up. Mortgage insurance is going to go up because it's based on a percentage of the mortgage amount. And so your total cost here, you can see it here. You went from 1970 when prices were crazy and bidding wars and all that stuff. We thought the market would no way that it could hold. And now that same home is going to cost you $33.55. So that's nearly an extra $1,400 a month to buy the same home in 2021 that you might have had to get in a bidding war for. Now you're going to get it for $75,000 more with 3 times more interest rate. So it's not just you that is having trouble affording the home right now, because the average person back in 2021 likely could afford a home, even though it felt expensive. $76,000 is roughly the average income here in Spokane. Now, following the same rules, you have to make about $130,000 to afford a home here in the Spokane area. And now these are cautious numbers because this is assuming that only 31% of your housing payments are going towards 31% of your income is going towards your housing payment. And so that means that you're going to need a higher income to qualify for that. If you have no other debts, because this is assuming that 12% of your income is going to other debts like cars or credit cards, and that you have a debt to income ratio of 43%. There are lenders that will tell you that they can get your DTI even higher. If you want to go 51%, like that's possible. And if you want to spend more than 30% of your income on your mortgage, you can do that too. These are just relatively responsible numbers to follow so that you can afford the rest of your life, because everything else is more expensive too. So by all means, somebody making less than $130,000 could get into a $426,000 house with a similar down payment and closing costs, but I just don't know if you would want to do that. So we're hopeful that we'll see this number here drop over the next 9 to 12 months. At least quite a bit. I'm hopeful for an average of the low 6s for 2025, and that will bring some relief. But I imagine that home prices are going to just stay relatively flat like we've seen them over the last 2 years. We can see that dip in 2023, but they're relatively recovered here in 2024. I wouldn't get your hopes up for a big drastic change that brings us back down. I think worst case scenario, we'd be at about 400,000. But again, the bottom of the next crash is going to be significantly higher than where we used to be. So I do have these numbers for Stevens County, just the more rural property. Similar story. People could have afforded a home making less than 50,000 in Q1 of 2021, and now have to make close to 100,000 to afford a home out there, because so many people kind of went out and bought land and bought houses out in the country and really inflated those prices out there. So looking at those numbers, it's really just, if you want to get into a home, you got to save up as much cash as possible, pay off your debts so that you have more debt to income ratio to play with, and then reach out, because I know of a lot of great opportunities to get you grant funds with different nonprofit credit unions in the area that'd be able to give you some free money to assist in your down payment. If that would be helpful at all, you can just shoot me a text at the number on the screen, 509-203-1168. Just text me free money and I'd be happy to get you that info. Otherwise, feel free to call, text, email anytime if you have questions about the Spokane area. Use the link in the description to schedule a strategy session on my calendar at a time that's convenient for you. We can talk all about your move, answer all your questions, and make sure you feel set up to be successful here in the Spokane area. Additionally, you can visit my website, haydenhalsted.com/relocation guide, and you would have an awesome guide that you can download there that might be able to answer a lot of your questions. Thanks so much for watching, and I'll see you in the next video.